The fast-moving consumer goods sector is the fourth largest sector of the Indian economy. It is characterized by a high turnover of consumer packaged goods, that is, goods that are produced, distributed, marketed, and consumed within a short span of time. FMCG products that dominate the market today are detergents, toiletries, tooth cleaning products, cosmetics, and many more. Good morning to one and all who are watching this video. Today, I, Rahul Aggarwal, and my group members Aditya Vedula, Manu Verma, Nipun Narula, Sunny Bansal, and Utkarsh Jain are going to do a short presentation on the current scenario of the FMCG industry. The FMCG sector in India also includes pharmaceuticals, consumer electronics, soft drink packed food products, and chocolates. Since the sector encompasses a diverse range of products, different companies dominate the market in subsectors. However, some of the top FMCG companies in India are Dabur, Colgate, and Hindustan Unilever Limited. An FMCG industry overview indicates that India's demographic profile plays a major role in the growth of this sector. Not only is India's demographic young, but this segment is also characterized by increased urbanization and high expenditure. Urban development initiatives by the government, as well as increasing middle class of India, has led to an increase in the number of attractive markets in the country. Ernst & Young's research on the cities of India highlights the emergence of 30 new wave cities such as Jaipur and Surat. Consumption in these cities is growing at a faster rate than that of many of India's metros. India's young population is also characterized by a high degree of technological awareness. The growing penetration of smartphones and better internet connectivity in India has led to a burgeoning e-commerce sector, which has in turn helped formalize large sections of unorganized retail sector. The e-commerce segment is projected to contribute 11% of overall Indian FMCG companies by the year 2030. The online FMCG market is projected to reach 45 billion in 2021. This has been a major catalyst in the development of FMCG sector in India. India's household and personal care is the leading segment, accounting for 50% share of the overall market. Healthcare accounts for 31% share, and food and beverages constitute 19%, which comes next in terms of market share. Growing access, easier awareness, and changing lifestyles have been the key growth drivers for the sector. The number of online users in India is likely to cross 850 million by the year 2025. FMCG industry is expected to grow by 5 to 6% by the year 2021. The retail market in India is estimated to reach $1.1 trillion by 2021, with expected modern trade expected to grow at 20 to 25% per annum, which is likely to boost revenues of the FMCG companies. People are gracefully embracing Ayurveda products, which has resulted in Patanjali being ranked as the most trusted brand in India in terms of FMCG industry. What are some of the advantages that FMCG industry sees in India? First, the lower penetration levels in rural areas offer room for growth across consumption categories. Major FMCG players are focusing on rural markets to increase the penetration in these areas. The rural FMCG size is expected to touch $220 billion by the year 2025. Online portals are expected to play a key role for companies trying to enter the hinterlands. The internet has contributed in a big way, facilitating a cheaper and more convenient means to increase a company's reach. The e-commerce segment is forecasted to contribute 11% to the overall FMCG sales by the year 2030. With a rise in disposable income, mid and high-income consumers in urban areas have shifted their purchase needs from essential to premium products. There is a huge headroom for FMCG companies to grow product portfolios in the premium segment. Indian and multinational FMCG players can leverage India as a strategic sourcing hub for cost competitive product development and manufacturing to cater to international markets. Tax benefits are also expected to increase the disposable income in hands of common people, especially in rural areas, which will be beneficial for the sector. Finally, opportunities arising from rapidly emerging digital technologies such as analytics and big data present a chance to make meaningful interventions and make capabilities across the value chain for FMCG companies. Rest assured, these are some really interesting and turbulent times for Indian FMCG industry. However, having said that, FMCG will continue to be the cornerstone of the Indian economy, touching every aspect of life. Now Nipun will take over.
Now I'll start talking about the strategies adopted by the FMCG industry. First, I'll go through the promotions and offers. Now, FMCG companies are trying to influence consumers with intelligent deals. Firms like ITC offers combo deals to customers. For example, in the case of soaps and cosmetics, 4 soap cases are offered at the price of 3, selling the range of deodorants for men and women at a discounted price. These techniques work well, as such as Amazon India is planning to invest significantly over the coming months for expanding its grocery and food business, launching more products and categories and forming new partnerships with huge grocery and supermarket chains. Moving on, there's also expansion. In May 2020, Tata Consumer Products Limited (TCPL) acquired PepsiCo's stake in NourishCo Beverages Unlimited, and this is one of the competitors of TCPL. So this is how they're working on expansion. In March 2020, Hindustan Unilever Limited signed an agreement with Glenmark Pharmaceuticals Limited to acquire the intimate hygiene brand VWash. And in July 2020, ITC Limited completed the acquisition of spice manufacturer Sunrise Foods Private Limited at an upfront cash deal for the price of 2,150 lakhs. Now, moving on, talking about customization. Now, there's a thing called product flanking. It's an introduction of different combination of product at different prices to cover as much market segments as possible. Now, Emami has decided to rework on its overseas strategy by planning manufacturing and acquisitions in overseas markets. The company plans to rework on its product portfolio by getting into new categories with higher buying preference and revamp its distribution networks. There's also a strategy for online sales launch that's been very relevant these days. FMCG companies are launching products online before making them available in traditional retail stores, with e-commerce sales recording 56% growth in the first quarter of 2020 and 38% increase in June 2020 itself. For instance, on August 7 2020, Dabur launched an entire range of Ayurvedic baby care range only on the e-commerce platform. Now I'll be talking about the opportunities for FMCG industry. For the rural market, leading players of consumer products have a distribution network in rural India. They also stand to gain from the contribution of technological advances like internet and e-commerce to better logistics. Rural FMCG market size is expected to touch US dollars of 220 billion by 2025. There's also a concept of innovative products. Indian consumers are highly adaptable to new and innovative products. For example, there has been an instance of easy acceptance of men's fairness creams and beard grooming products, flavored yogurt, Cuppamania noodles, Get gel-based facial bleach, and drinking yogurt, sugar-free chyawanprash, etc. Now, these are different from the premium products, which also happen to be a great opportunity for FMCG industry. With the rise in disposable income, mid and high income consumers in urban areas have shifted their purchase trend from essential to premium products. Premium brands are manufacturing small packets of premium products. For example, Dove is available in 50-gram packaging. Now, this happens to be a great opportunity, but there's one more opportunity that dwells behind, that's penetration. Now, low penetration levels offer room for growth across consumption categories. Major players are generally focusing on rural markets to increase their penetration in those areas. Now, I'll be going through the growth drivers for India's FMCG sector. Now, talking about the shift to organized market, organized sector is expected to grow as a share of unorganized FMCG market, which has seen a fall with increased level of brand consciousness. Now, the growth in modern retail will augment the growth of organized FMCG sector, but the post GST and demonetization modern trade share that grew to 10% of the overall FMCG revenue as of August 2019, it helped in the shift to organized market. Talking about the increase in penetration, the low penetration levels of branded products in categories like instant foods indicating a scope for volume growth. This helps in investment of the sector, which attracts investors as FMCG products have demand throughout the year. There's also the growth driver of easy access. Availability of products, which has become way easier as internet and different channels of sales has made the accessibility of desired product to consumers more convenient at the required time and place. There's also the growth driver for rural consumption. Rural consumption has increased, led by a combination of increase in income and higher aspiration levels. There's an increased demand for branded products in rural India, which is a highly untapped rural market.
Hindustan Unilever is India's largest FMCG company with a heritage of over 80 years in India. It is a subsidiary of Unilever, which has over 67% shareholding in HUL. With over 35 brands spanning 20 distinct categories, the company is a part of the everyday life of millions of consumers across India. It has about 21,000 employees and has sales of INR 38,273 crores for the financial year 2019-2020. The company's vision is to grow the business while decoupling their environmental footprint from their growth and increasing their positive social impact. Its portfolio includes leading household brands such as Lux, Lifebuoy, Surf Excel, Rin, Wheel, Glow and Lovely, Pond's, Vaseline, Lakme, Dove, Clinic Plus, Sunsilk, Pepsodent, Axe, etc. Now we will talk about the HUL success strategy. It is all about localization and premiumization. Winning in many Indias is a concept which led to localization not only in terms of products but distribution and supply chain. HUL divided India into 14 clusters based on consumption patterns and stages of economic development. Teams were formed in form of consumer clusters across India and people from regional sales roles were moved to take on these consumer clusters. Once the clusters were formed, product customization such as brew instant coffee variant in Karnataka, which suited the state's coffee consumption style, happened. People there prefer boiling coffee beans and not filtering it as in other parts of South India. The Karnataka brew variant mimics the traditional Kannadiga coffee taste. Similarly, HUL launched a Rin detergent variant which promises to conserve water in areas where there is water deficiency. WIMI helped in proactively dealing with unfair competition at a cluster or local level. The second has been the premiumization. The company, in fact, has identified categories such as fabric conditioners, liquid detergent, hair conditioners, antiperspirants, and green tea as categories of the future. They have identified businesses where they said they are going to invest to grow disproportionately. Now let's talk about the future prospects of HUL. HUL is focusing on e-commerce and modern trade channels, which it considers as channels of the future. HUL is evolving to adapt to the trends by embedding technology across its end-to-end value chain to build a business which is future fit. They are focusing on building online shelves on the e-commerce platforms with winning point of sale communication. They are digitizing our route to market and having a strong presence in the growth channels such as modern trade and e-commerce. They pick up consumer signals real time through the people data center, which analyzes consumer sentiments and conversations about the brands and categories. Thus, HUL is using savings to invest in growth areas of the future and in better products and brands, and this in turn increases margins for the company.
I will be taking you through the analysis of ITC. ITC was incorporated on August 24th, 1910 under the name of Imperial Tobacco Company of India Limited, which was later renamed to ITC Limited in the year 2001. ITC is one of India's foremost private sector companies and a diversified conglomerate with businesses spanning across FMCG, hotels, paperboards and packaging, agribusiness, and IT. It has about 27,000 employees and a gross sales of approximately 76,000 crores and a net profit of 50,000 crores in the financial year of 2019-2020. The company's vision is to sustain ITC's position as one of India's most valuable corporations through world-class performance, creating growing value of Indian economy and company stakeholders. ITC's portfolio includes world-class FMCG brands like Asharvad, Sunfeast, Yippee, Bingo, Be Natural, ITC MasterChef, Febel, Sunbeam, Fiamma, Engage, Bevel, Savlon, Classmate, Papercraft, Mangaldeep, and AIM. Now I'll be taking you through the corporate strategy of ITC Limited. ITC aims to create multiple drivers of growth by developing a portfolio of world-class businesses that best matches organizational capability with opportunities in domestic and export markets. They continue to focus on the chosen portfolio of FMCG, hotels, papers, paperboards and packaging, agribusiness, and information technology. They aim to benchmark the health of each business comprehensively across the criteria of market standing, profitability, and internal vitality. They ensure that each of the businesses is world-class and internationally competitive. They focus to enhance the competitive power of the portfolio through synergies derived by blending the diverse skills and capabilities residing in ITC's various businesses. They create distributed leadership within the organization by nurturing talented and focused top management teams for each of the businesses. They continuously strengthen and refine corporate governance processes and systems to catalyze the entrepreneurial energies of management by striking the golden balance between executive freedom and the need for effective control and accountability. Now I'll be taking you through the future plans of ITC Limited. ITC is planning to focus on health and wellness products within the FMCG vertical, which will be supported by multi-dimensional investments. ITC will attempt to reinforce the existing categories in the FMCG segment. ITC plans to make FMCG a large business and take it to the 1 lakh crore market in the long term. ITC is restricting itself from alternative investment funds. It is planning to make direct investments in startups in the FMCG space. ITC is investing in building state-of-the-art manufacturing infrastructure across India to rapidly scale up the FMCG businesses, build an extremely competitive supply chain, and to contribute to country's Make in India vision. Finally, ITC aims to create a unique source of competitive advantage through diversity of the businesses and create new opportunities of growth.
The FMCG industry has always been competitive, given the need to drive high sales volume because of the low profit margins on the products. We have seen steady growth in smartphone usage, digital payments, online banking, and app-based platforms. Online retail is becoming mainstream. While initially thought to be ideal for the purchase of durables and entertainment products and services, where price comparison is key, it has become common for FMCG companies to use e-commerce platforms. Even perishables are being purchased online with the rise in number of online grocery stores. This is impacting the FMCG industry in a number of ways. Change in marketing strategy. FMCG companies need to continue their traditional marketing strategy for in-store consumers. But at the same time, they need to reach out to a wider base of consumers who shop online. The profile of these consumers is different. They are younger and technologically savvier. They do not necessarily believe in brand loyalty. While the browse to buy ratio for FMCG products is high, they are having to invest in digital marketing strategies, including personalized campaigns and presence in social media and online forums. Even packaging for in-store and online products needs to be different for some products. Increased competition. An online presence means that your brand can reach a wider audience. But this also means that competition becomes tougher. Now global brands compete with brands from other countries as well as local brands on the same online platform. This raises the bar, with companies competing not only on price and product, but also on delivery services and better customer feedback.
Increased complexity of the supply chain. No longer can an FMCG company depend solely on trucks delivering their products to stores at a fixed time of the day. As they play as they plan increasingly in the B2C space, they have to constantly be aware of seasonality and spikes. This means that their supply chain operations become that much more complicated and they are having to spend more on logistics and transportation. The next factor is understanding consumer trends and analyzing data. An insight into consumer behavior and understanding of preferences of different types of consumers and analysis of the footfalls are major elements the FMCG depends on to improve its products and services. Understanding consumer behavior and ordering trends by utilizing an effective analytics software has become a prerequisite for improving sale on online platforms. It is essential to have a central system to consolidate customer information and sales data across all online platforms. Businesses need to analyze this data to understand operational challenges and to run effective marketing campaigns. Data analysis has become a prerequisite for businesses to increase sales, simplify reconciliation, and enhance customer retention and loyalty. The next factor we'll be looking forward is changing consumer profile. As mentioned earlier, the consumer profile of the FMCG industry has changed to include young consumers who want to shop online. It also includes consumers in newer markets made possibly by e-commerce platforms. FMCG companies also have to cater to consumers who are conscious about product quality and the environment and ethics. This means they want to know where the products were grown or manufactured, their carbon footprints, and generally want more traceability of the products they are purchasing. This has led governments to come up with guidelines to protect consumer rights. The next factor we'll be looking is optimizing operations. While selling on multiple online portals is a quick and easy way to reach consumers, managing orders across multiple dashboards for each of these platforms becomes quite cumbersome. Optimizing operations so as to seamlessly manage sales across all online platforms is the key to winning the online game. It also becomes essential for any business to have real-time control over all businesses aspects ranging from the menu on online channels to sales and operations data. Now we move forward to concluding the topic. Today, fast-moving consumer goods have become an integral part of human life. This sector is recession-proof and created huge employment opportunity in India, hence becoming one of the key pillars of Indian economy. FMCG companies should encash opportunities like increasing consumer income, changing consumer lifestyle, aspiring rural consumer, consistent economic growth by utilizing its strengths.
The competition from unorganized sector can be overcome by increasing brand awareness and by reducing cost through sharing resources such as distribution network. Favorable developments happening in demand side, supply side, and systematic drivers show that this sector has a very bright future.
Despite a recent slowdown in the Indian economy, the FMCG sector is expected to continue on a growth trajectory over the next few years.
From greater use of digital marketing to increasing customization for e-commerce, an increasing number of players in the sector are today actively embracing digital technology to drive the next phase of growth and hectic competition.
The ability to digitize fast will also be a significant differentiator between organizations as they transform themselves to suit the changing needs of time.
In summary, the best strategy for FMCG businesses is to be obsessed with the customer and his wants rather than obsessing over competition. E-commerce has opened a channel that everyone has to run after. It has truly empowered the consumer. If FMCG companies wish to stay ahead of the competition, they need to bring more value to the table. They need to grow in the interest of consumer and innovate, not just by adopting multi-channel distribution, but in terms of product innovation as well.